Okay, welcome back to the channel. Thanks for joining. Today's video we're going to talk about the top movers and fallers. I bought Amazon, as you can tell from the thumbnail and the title, so I'm going to talk to you a bit about why I have purchased Amazon. I've also sold another UK stock and I've received 2 dividend payments all this week. So if you want to know all of that plus more, like up the video, subscribe to the channel, ring that notification bell, and if you're wondering what application I'm using the free trade app to invest. My link will be down below in the pinned comment and description, freetrade.io/infant-investors. Click on the link, sign up, deposit £1 and you'll get a free share of up to £200. Let's get straight into the top movers. Now, the first top mover to speak about is PayPal. So PayPal is a top mover for me this week, and I'm going to be quoting percentages from Simply Wall Street, as I've mentioned previously before, and it's gone up 6.35% this week. And with a lot of the stocks that I'm going to talk about this week, there is an underlying theme, and that theme is pretty much the pandemic. So whether it's a top faller or a top mover, the pandemic, the second lockdown in many nations, the rising cases of the pandemic is actually contributing to a lot of the performances that you will see throughout the course of this week. Plus, there is some other factors for some of the other individual stocks. So with the case of PayPal, there's nothing really specifically that they've done. There is an article from the Motley Fool, which I will put the link down below, which talks about the fact that PayPal will be launching more new products in the second half of 2020 than they have done in the previous 6 years. They talked about things like increased store presence and some of the other technology that they want to take advantage of. So yeah, that's pretty much it. The tech market generally had quite a bit of a funny week this week, where things generally went down, but over the last day, some stocks actually started to have quite a considerable rise, and obviously PayPal was one of them. So yeah, the first top mover was PayPal. The second top mover to talk about is Cloudflare. Cloudflare is finally in the green for me, and that is now a top mover. Interestingly though, which is a negative thing for Cloudflare, is that a lot of insider selling activity has been noticed. So a lot of their C-suite has actually been selling quite a considerable amount of shares. The CEO, for example, sold $5.3 million worth of shares. Now, the question becomes, is that a bad thing? Is that a good thing? Typically speaking, that's not necessarily a good sign. It's actually not a positive thing. But we have seen that in my portfolio, and we've discussed it in a few other videos, that it's not necessarily a bad thing overall. Sometimes, because obviously these people have had equity stake in these companies from the very, very beginning, and have had shares at $1 and so forth, they are just actually taking their profit, potentially sometimes reinvesting into new ventures or other additional ventures, or they just want to take a bit of profit. They're not saying that they don't have vote of confidence in the business, and often they still leave a lot of shares on the table as well. So where it is a little bit of a gloomy sign, to be honest, I'm not actually going to be worried about it. And obviously, as you can see, this week it's gone up 7.93%, so just ignore the percentage you can see here, and it's doing pretty well. So I'm in Cloudflare for the long term. My horizon for Cloudflare is probably, I would say, around the 5-year plus mark, at least a minimum 3 years, just in case, who knows what's going to happen in the world over the time. So maybe I might have to change strategy slightly, but it's definitely long term. And so, I'm happy to see it going in the right direction. And I think I've definitely, put enough into Cloudflare. So we'll just see what happens and, just let this one rise. The last top mover to talk about is OCTA. So OCTA has gone up this week, and this one has gone up 9.39%. And this is where I think the pandemic is to play. Obviously, because of the whole, potential second lockdown, OCTA is an identity management solution, a security management solution for a lot of enterprise businesses. And with people working from home, their need to have OCTA as an authentication system has greatly increased. This is one of the pandemic-proof businesses that earlier in the year did significantly well. And obviously, if we are going to go into another lockdown, then it's going to work into the favor of OCTA. I don't think there's anything that's changed necessarily with the fundamentals, bar the fact that they've obviously increased in revenue over the last 6 monthly period. However, there's nothing else generally that's changed within the business. So I think one of the reasons it's gone up 10% this week, 9.39% to be precise, is due to the pandemic. Now let's get into the top fallers within my portfolio. The first top faller to talk about is Uber. So Uber has gone down this week 5.56%, and as I mentioned to you, I think the underlying theme is the pandemic. And obviously for a business like Uber, which requires people and relies on people to be out and about, and obviously their ride hailing business took a significant hit in the early part of the year. They lost about 75% of their business. They made so many redundancies worldwide. They closed certain businesses down in certain geographies. It's obviously had a significantly negative impact there. Uber Eats business has done well, but unfortunately the numbers and the volumes there just don't outweigh the losses within the ride hailing business. So if there is a second lockdown, that's obviously a negative sign for Uber, and that's one of the reasons why Uber's gone down 7.17% this week for my perspective. The second stock that's gone down this week is Legal and General. It's been in the top fallers twice in a row, so you can see over the month it's gone down 18.72%. This week has actually gone down 7.56%, again according to Simply Wall Street. Now again, this is due to the pandemic. Again, I'm sounding like a broken record, but unfortunately it's the same thing. Fears over the second lockdown wiped 50 billion off the FTSE 100 this week. So obviously Legal and General, being a FTSE 100 stock, is going to be no stranger to that. And I think those macroeconomic conditions have had a significant impact, not just to Legal and General, but to some other stocks as well, which we're going to talk a little bit about later on in the video, and the reason why I obviously sold a certain stock this week. So yeah, I think the pandemic situation for the UK is not going to be great. The second lockdown is not going to be great. You've obviously got Brexit. You've obviously got a culmination of factors that's currently going on in the UK, and I just think for UK businesses and stocks, it's just a really, really troubling and testing time. The stock that is the top faller for this week, you've guessed it, I told you, this stock is always going to be a top mover and top faller every week on week, and that's obviously Tesla. Tesla this week has gone down 7.87%. So not as much as you can kind of see here on your screen. And this is primarily due to the fact that Battery Day was perceived as a disappointment among investors. So, personally speaking, I think it showed some interest in technology. It's the first Battery Day that I've paid a lot of attention to. So I haven't been sort of watching the previous Battery Days. I would just maybe scan an article because I wasn't a Tesla shareholder at that time and during those periods. So I think some of you guys are going to have to tell me how you feel about the Battery Day overall. Me personally, I think it showed some interest in technology. I think it just wasn't as exciting as people expected and wanted it to be. I personally think it was better than Apple's announcements. I think Apple's special event was worse, personally speaking. They just basically said, how can we repackage the watch and sell it to you? How can we repackage services and sell it to you? And how can we just make more money from you? I don't think they really innovated or did anything really special. With Tesla, I think they're actually showing a lot of intent. They talked about their $25,000 electric vehicle that they want to do in the future. They talked about their battery cell production, how they're trying to bring that in-house and obviously ramp up production. They talked about some big and exciting plans. I just think due to Tesla's history, it wasn't as big, as exciting as it has probably been previously. That's my assumption, but get in the comments and correct me if I'm wrong. And I think that's probably why it's had a bit of a negative sentiment this week. So yeah, I'm not worried. Obviously, I'm taking a small L, to be honest, with Tesla. I don't think I'm going to add any more money into Tesla just because of the money that's remaining in my ISA allowance, and potentially adding that to existing other stocks that I've got, or getting a new stock. We shall see. But yeah, that's the current situation with there. So yeah, the top fallers: Uber, Legal and General, and of course Tesla. Now, I've sold a stock, which you can see here, but I'm actually just going to go to the stock page because I think it's probably just nicer and easier to see. And that stock is Barrett. So you can see here that I sold my shares in Barrett. Now listen, this was a hard choice. This is one of the harder stock sell choices that I've had, similar to Virgin Money, and primarily because Barrett was, one of my favorite investments during the course of 2019. It did really well. And when the market conditions are normal, I'm not even going to say good market conditions. I'm just going to say normal market conditions. We're not fighting a global pandemic. We're not worried about all of the other factors that's been going on, then I think Barrett is a solid business. Their balance sheet, their production numbers, their order book, their fundamentals, which is primarily why I based my decisions in buying the stock, was all great and continue to be great. And that's the reason why I held on to it for so long. But I just think because of this whole second pandemic situation, they're just not going to be able to produce the houses, get the orders in. And I just think right now is not the time. Also considering they're not paying dividend as well, the money is just effectively losing value. Now, will I get Barrett again at some point in the future? I hope so. I hope that at some point in the future, when things start to go well and Lloyds are starting to go in the right direction, I will reevaluate things like Barrett and potentially hold it again. But I don't know. I don't know what the future is going to hold. I just felt that at this current time, that money could probably be put to better use and better work. And that's the reason why I sold Barrett Development. So yeah, I don't think there's anything wrong with the business, but I do think that this business in this current climate just isn't currently working for me. And that's one of the reasons why I sold Barrett. I put a bit of that money into Amazon. So you can see here that obviously I've made an investment into Amazon, just over 2 shares into Amazon. And Amazon, I think, is a business that, whether or not, I'm trying to think about safe growth stocks a little bit recently. So there are some growth stocks that I want to get, your Virgin Galactics and some other ones that are going to be a lot more riskier. But I'm trying to think, this is my ISA, this is a long-term hold. And so what are some of the safe growth stocks that regardless I should just be owning over the long term? And I think Amazon was definitely on my list. I was watching Amazon back in the day when it was like £1,250 to £1,500, and I used to think that was too expensive. And that was me obviously learning that expense has got nothing to do with the share price and actually to do with the fundamentals of the business. And Amazon has obviously considerably started to rise, since that period. And you can see that here. I think over the last year, you can see it's 75% growth. And I think over the last 5 years, compounded annually, the business has grown 51.3% year on year over the last 5 years. And I think when you look at its future growth potential being about 65%, I definitely can see that trend continuing over the next 5 years, to be fair. When you look at some of the things they're trying to do from Amazon Go, I think that's got a lot of future potential. I did an Instagram post on that and talked about how they've got a very, very, very minuscule market share comparatively to Walmart with Amazon Go. And if they increase that to like 1% of what Walmart has, that's going to be, billions in terms of the impact to Amazon's balance sheet. They're always launching new innovations and products almost too aggressively. I mean, the moment a company launches something, Amazon is probably considering how they can launch their own version of it as well. There was some fake news this week about them launching their Amazon Prime bike, with Echelon, competing with Peloton and so forth. So that was obviously fake. However, they are trying to do their own curriculum, which I think is going to be one to watch in the future. I talked quite a few videos ago, I can't even remember which video it took, when it talked about Google wants to do their own curriculum. So you don't really need a degree. Their vision is that, for every single field you want to get into, there's a Google course for it. And if you get past the Google course and obviously you get certified, then that should be enough for you to be employed. So you don't actually need a degree. And that will be significantly cheaper than obviously going to university. So, for example, let's say you want to be a psychologist. I'm just making this up. Maybe this is not going to be one of the fields they cover, but just as an example, you say you want to be a psychologist. Rather than doing 3 years in uni and then being 60 grand in debt at the end of the 3 years, there might be a Google psychologist certified course, which might have 3 different tiers, and that's going to be, let's say £1,500 end to end. And once you do that course for a year, if you pass it and obviously you get your grades, then you could potentially get a job in that field. That's effectively the vision. And I think Amazon is doing a homeschooling thing, which is obviously going to be relevant for this whole pandemic period, but I think it can transcend further into a curriculum. I think there could be a day, mark my words, I think there could be a day when actually going to university is going to be completely redundant. Now, some people might think it's redundant. Now, I've gone to uni. Do you know what I mean? I've always felt that, it's good to go to uni, but I've never felt you should have or you had to have gone to uni. I know many people that are very, very successful without going to university. But sometimes in the corporate world, when you're trying to apply for jobs, they do require a degree. I think there will come a day when that's going to be completely obsolete and people won't need to get into a considerable amount of debt, and maybe Amazon and Google might be leading the way in that. So I'm pretty excited about Amazon's future. I think their Prime memberships is continuing to grow. The value adds that they give their whole food acquisition, I think, will definitely start to pay off at some stage in the future. And their fundamentals, their balance sheet, their debt to equity ratio, all of the other things that I look at has definitely been solid. So yeah, it's been on my balance sheet it's been on my watch list rather for a while. It started to drop considerably from highs of 3,500, I think, to just under 3,000. So yeah, it was like 3,500 something, and then it went to like 2,800 or whatnot. I didn't have the cash there to deploy because I hadn't sold Barrett yet, so I didn't really get it at under 3,000, which was my target price. But I still got it at a decent price anyway, and we'll see what happens with that in the future. But I think it's definitely a good addition, and I'm excited to see in the next couple of years how that basically plans out. And some people have said that Amazon should be doing a stock split. So if they do a stock split, that might have a good impact to the stock price, that we've seen with Apple and with Tesla as well. But there's no real news about that actually happening, so that is a bit of speculation. Now, I have received 2 dividend payments, and you can see that here. The first dividend payment was from Legal and General, and that was £64, and I received that this week. And on the same day I received an Aviva dividend payment of £96. You might be thinking, oh, you don't hold Aviva, how did you get an Aviva dividend? This was obviously from the ex-div date to the time that I've obviously sold the stock. So I held the stock past the ex-div date, and then obviously I sold the stock about a week later, I think, and obviously I've received a dividend payment. So it will be my last dividend payment for Aviva. I won't be getting another one. I have had an interesting conversation with someone, because I was speaking to them about the fact that I received a dividend payment, or they're talking to me about their dividend payments, and then I started to talk about mine as well. And am I going to be upset that I'm no longer going to be getting £100 dividend payments a couple of times a year? Well, not really. And as I've said to some of you guys, I think that some of my stocks, you could basically convert them to dividends if you want to look at it in a certain way. I've held Aviva for 2 years, and I've probably received about £400 in dividends on Aviva, and my capital gain had reduced because the value of the stock started to go down. So let's say overall I've netted at around £300 as an example for a couple of years. Well, with OCTA, with much less money in OCTA, you can see that I'm up £800. So that effectively is my dividend payment if I was to sell OCTA right now. So I don't worry about getting dividends. I think dividends has a real psychological benefit, and I think if you are a dividend investor and you are have a dividend portfolio, then I think there's nothing wrong with that, and I actually like that, and I think there's good value in that if you are reinvesting those dividends and compounding for the long term. But I think because I'm naturally transitioning to a bit more growth, I'm not going to be concerned that I'm not going to receive certain dividends at certain intervals anymore, because I know that the growth stocks that I'm trying to pick and trying to select will effectively offset any of that as well. The other dividend I received was Legal and General, but as you can see, I still hold Legal and General. I'm not going to lie, I am considering selling Legal and General as well, primarily for the same reasons as Barrett, but I thought to hold on to it a bit more just because it does pay a dividend, see what happens when the next ex-div date comes up, see how much it rises, and then I might take a decision and a call at that point as well. But yeah, I received a £64 dividend with that. So overall, I'm still on my concentrating strategy where I'm trying to have a bit more of a concentrated portfolio. I've got 12 stocks now, 4 stocks that pay a dividend, which is Micro Hard, Apple, Centamin, and LNG. And this has definitely been a transitional year for me. At the beginning of the year, I was a value dividend investor. I've now told you guys on multiple occasions I'm trying to transition to more of a growth investor, and I've done that periodically throughout the course of the year, and I'm going to keep on doing that until I feel the portfolio is in the position it needs to be in, and then obviously I'm just going to leave it, let it ride for 2021, 2022, and hopefully, you know, when I'm doing portfolio update number 176 or whatever, we're going to be seeing some good figures there. So yeah, hopefully you found this video useful. If you did, like, comment, subscribe, and I will catch you next time with another investment video. Take care, guys. Peace.